Hello, this is Dr. Seto, and I'm the instructor of this course in accounting, and I'm just going to get the PowerPoint all set up. And as you can see, this is the goal that we're working towards, and the goal is that we will be doing the exercises in Chapter 1. So let me just see if I can get this all set up. Let me just hold on. These are the exercises that we're working towards. Okay, so now let's go back and the textbook spends a considerable amount of time talking about the relationship between the four important financial statements that we're going to be using in accounting. And it all starts with the income statement. Remember, the income statement is financial performance of the company for a certain period of time. So remember, is it annual performance or is it a quarterly performance? And then based on the how the company did its increase its value, did its contribution from sales increase the value, and then of course that's reflected. Remember, the value of the company is another way of saying equity. So basically, if the company has done very well, then the company is more valuable, and that's recorded in the statement of changes in equity. So it's actual dollar figure or ringgit figure that goes into the statement of changes in the equity. So increase or decrease. I'd like to have an increase. And so therefore, that's reflected on the balance sheet. And remember, the balance sheet is basically the Beer equation: assets equals liability plus owner's equity. So basically, the increase, any change in the income statement, the profit. So increase profit, increase equity for that period of time, and so then that is transferred into, that figure is transferred into the equity section of the balance sheet. Another term for balance sheet, according to International Financial Reporting Standards, is a statement of financial position, and then from there, then it goes into the statement of cash flows. All right, let's see. So again, I'm just going to go ahead. So income statement, changes in equity, balance sheet. And I think we ended up last video into, there we are. No, not that. Okay. Statement of cash flows. So the fourth one is the statement of cash flows. So basically, where's the cash coming from? Is it from operating the company, sales and expenses, or is it through the investments? So in your textbook, it goes to PPE, property and equipment, and then, or is it through financing? So there's many ways in which a company can make money. Apple, for example, yes, it's the sale of MacBook and iPads, iPods, iPhones, the watch, etc. That's operating. But investing, what has Apple invested in? Maybe they invested in different companies. And then there's the financing. So there's lots of ways to make money in a company. So here we are again, a little bit more detail for the statement of cash flows. So now we have the relationship again. So the net income comes into the net income here. Remember, revenue expenses gives you, revenue subtract expenses gives you this net income. Then the net income figure, of course, changes the equity. So if there's an increase in net income, then guess what? The ending equity has increased. And for Apple Q2 2015, yes, when you have 12 billion pounds in net income, that certainly made the company a little bit more valuable. Okay, so then then here it is, the statement of change in equity, financial statement number 2. There it is, that ending equity. Where do you put it? Right in the balance sheet. Okay, so right here in this category, remember, A equals liabilities plus equity, and therefore there should be this should be balanced out. Okay, as you can see, cash from the asset section equals the cash in the statement of cash flows. Okay, so assets, cash, cash. And this video will finish up by what is it that these four financial statements can do for people who are investing. You've got some extra cash, and you think, maybe I would like to invest in a company, or maybe you are thinking, I've got money in a company already? Should I take it out? Should I take it in? Should I buy, hold, or sell? And these are the questions you should be looking at. So, can the company sell its products or its services? Okay, so in order to find that out, you're looking for the income statement. What are the main income measures to watch for the trends? Again, you should look for this into the income statement part, for the income statement, financial statement. Okay, what percentage of sales revenue ends up as profit? Again, you look at the income statement. And then there's the last three questions. Okay, you're looking at, so for example here, can it pay its liabilities? You're looking at assets to liabilities. There's a ratio for that. We'll look at that later on. And you look for that in the balance sheet. And where's the cash coming from? Then, or you look at the fourth financial statement, which is the statement of cash flows. Okay, so these are some great questions to ask. And if you look at Apple or Samsung or the Gap or any company or any industry you're looking at, just for fun, take a look. And of course, you'll be doing that as your ISU. Okay, so let's go back. And ethics. So basically, you want to have a clear and authentic and accurate, basically a picture of whichever company or business entity that you're looking at if you're helping to prepare the books. And in terms of ethics, I think if you look at it as clear, concise, and authentic, it'll treat you very well. People hide things, and that's stuff that goes in the dark. Right. Okay. Now, what I'd like to do now is go back. Here we are. I'm looking at your textbook. Right, and we've got some room in this video. And so one way this chapter can be summarized is you look at page 29, and it's called Decision Guides. And I personally like this, but what I really don't like is it's the textbook, like here on page 30. I mean, I like this, the end of chapter summary problem. It's great. However, it gives the answers right away, and as human beings, we're often just tempted to go straight to the answer. So I would like you to approach any of the questions that are going to be assigned as homework. Think of it this way. So let's take a look at this summary problem. Okay, so there's a car wash company that started operations in April 1st. And right now, it's the end of the first month of operations. It's April 30th. And they're wondering, well, how have we done so far? And so anytime people have invested, they'll ask you these questions. And if you're on top of things, then it's not such an onerous activity. So keeping in mind that we have assets equals liabilities, owner's equity. That's the first and most important accounting equation. And the fact that we've looked at 4 financial statements, when you approach a problem like this, it says, well, how do they know? And it says, prepare the financial statements. You know you're going to prepare 4 of them. And then they give you some information. First thing to do with the information is decide which information goes where. So look at this, accounts payable. So out of the 4 different financial statements, where does this belong? Is it a balance sheet item? Is it an income statement item? Is it a statement of cash flow item? Is it a change in the equity item? Okay. Well, because we talked about the balance sheet first, you should recognize this as a balance sheet item. So this is an accounts payable. And remember, which category does it go under? Assets equals liabilities equals assets equals liabilities plus owner's equity. Well, this is a liability. So you know you're going to have to put that in. And so it doesn't hurt if this is your textbook to actually write balance sheet vs liability. So let's go through the rest of this. Accounts receivable. That's also balance sheet. And this is an asset item, so just put an asset. Adjustments to reconcile net income to net cash provided by operating activities. Okay, you know that is definitely not a balance sheet item. It's not an income statement item either. Okay, so when anytime you see this thing to adjust or go back into your textbook. Okay, so remember this is a textbook. Find out where does it go. You've got four financial statements, and this book gives it in great detail. So you find out where it goes. Okay, and so then you label it. Okay, let me just go back. There we go. All right. So cash balance at the beginning of, cash balance at the end of. All right. So does that sound like, change in equity? Or does that sound like change in cash flow? All right, take a look. Then here's cash receipts, share capital, land, payments of cash, acquisition of land, and dividends. So you know this goes under one of those last two, cash. Land is balance sheet. It's an asset. Rent expense. Anything that's an expense, it's under income statement. Revenue minus expenses gives you your net income. Retained earnings, salary expense, service revenue, income statement, supplies, and utilities expense. So I prefer that if you break it down and you focus, first of all, step by step by step. That's all accounting is. Take it slow, identify what it is, where it goes, and that'll make your life a lot easier when you're preparing the financial statements. Now, of course, this textbook gives you the answer to the summary problem. So that's, it's there, but it's, so let me go back here. I would like you, because it'll help you out. These are actually you can answer every question in the text. If you feel like you want that extra practice, go for it. But I think it's fair to give us these to work on. And they're in your text. Let me just pull that up. So, for example, the last two on page 52, they're very short. Apply your knowledge. Basically, you've got two companies, and they would like you to loan them money. What you have to evaluate is which one are you more comfortable loaning money to? Is it Blue Skies or Open Road? So what's happened is you've got the balance sheets, and which one are you more comfortable? So you're only working with one balance sheet. So give it a go. And I'm near the end of my time with this software program. So anyways, if we just keep it nice and short, so on page 52, sorry, this is page 52, and on page 51, prepare a company's financial statement. So again, income statement, the change in equity, balance sheet, and then statement of cash flows. This is a comprehensive problem. So there it is. And then there are these more minor problems. Do them in the order of, like, these are skill problems, then go into preparing these different financial statements, and there's a sort of summary case. And then use these two as a way to extend the knowledge. And I think that this gives you plenty of practice for making sure that you understand what's going on in Chapter 1. All right, everybody, you have a great day. And